Good morning, everybody. I welcome you all on this first technical session of paper 1. Well, yesterday all the groups have deliberated on the issues given by both the paper writers. The reporting has been done by them, and now we are all eager to hear the views of the paper writers themselves directly from the horse's mouth. What are the probable solutions and what are the other issues that could be involved in the issues given by them. Well, before starting the session, I'll request my convener Alok Mehta to please introduce the paper writer.
Respected Joint Secretary Shri Hitesh Shah, President Shri Yatin Desai, Chairman Shri Ashit Shah, my Vice Chairman Shri Pranav Kapadia, and Convener Narendra Soni. And dear friends, good morning to all of you. It gives me a great pleasure to introduce our first paper writers or speaker on the technical subject on a case studies on VAT and service tax, Shri Mr. P.K. Sahu. Mr. P.K. Sahu is advocate. He is a honors graduate in physics, MA in political science, LLB, and has studied the management at IIM Kolkata. He is an advocate, started his career in the income tax department, has joined the Indian Revenue Services in 1978. He was posted in various capacity in Kolkata, Cuttack, Bhubaneswar and New Delhi. In 1996-1997, he was the member of the expert group set up by the Government of India to rewrite income tax laws, and the group has submitted a report and draft income tax bill in 1997. In 1998, he took a voluntary retirement to start his legal practice, and at present he is based in New Delhi and having his professional practice in all branches of tax laws. With this brief introduction, please put your hand together. Give a warm welcome and regard to Shri P.K. Sahu. Before he proceeds further, I request our Secretary Shri Hitesh Bhai to offer a memento on the behalf of Chamber as a mark of our love and affection. Again I request you, please put your hand together. Now request Mr. P.K. Sahu to present your views.
Good morning, friends. Thankfully, I was introduced as a paper writer and not faculty. When I was invited to participate in this residential refresher course, I was horrified because it sounded like teaching. And I have great admiration for teachers and authors and chartered accountants who sign certificates, because all three of them are supposed to know everything and comprehensive. So it's a very unenviable situation to know, to be expected to know everything and give advice. And chartered accountant friends start reading the law even before it comes into effect, as soon as the bills are introduced. We are exposed to law much after that. When problems come to us, probably the law might have changed also by that time. So therefore we are not abreast with law. And I do not have a complete comprehensive view. So I will do my best to share my experience. We have case studies and a lot of animated discussion was there and views were expressed. I will add one more view to whatever view you have expressed. Friends, why do we read history? Of course, in student days we hate this subject because you have to remember so many names and dates. But why is history written in the first place? we should remember what happened, when it was happened, and why it was happened. And that would give us a guide to the present as well as to the future. And it is said that if anybody does not read history, he is condemned to repeat it. So we should, even in our own life, whatever we have experienced, we have acted, decided, we keep on remembering and try to draw lessons from them. Do you read textbook after the examination? Mercifully, that period is over, so no need to go back to the textbook. Or is it worth to go back to the textbook to see whether what you have answered is correct or not, or how better you could have answered? Or you think over the subject after your appearance is over. I think this type of journey helps in learning lessons in our life. Now, I would specially mention about our young friends who might be expecting to go back with lessons. But what I would advise that this is a place for contemplation, to think, to brainstorm, to have several types of ideas, and then go back home thinking and keep thinking. And from that only this your ideas, logic, those things will get polished. So the purpose is to have several types of approaches to the same problem. And this way I think one would evolve one's thinking process, logical process, and not to look for just only answers. So therefore, my endeavor is only in that sense. And even while I was attending, seeing the groups discussing, my thought process was on, and I found that in some cases I thought that probably I have reached the end of the logical process, but I found that no, it has to be explored further. There are other viewpoints which are worth considering. Now let us come to the case studies. Loyalty scheme. There are several transactions within the whole scheme. The loyalty scheme operator has brought on its platform several redeemers and several retailers and members who get this benefit of going to these selected retailers, buy and get reward points and redeem them through redeemers. You have gone through these facts. Now I will analyze each segment. When the operator enlists the member and receives a membership fee of 10,000 rupees, operator is providing a facility where one can buy things, get reward points and redeem them or even sell them. So this is not a situation of sale of goods, this is a case of service. So all the groups have opined that this is subject to service tax. When a retailer rewards 10,000 points to the customer, now at this stage the customer is giving a reward point. He happens to be the member of this scheme. If a customer is not a member of this scheme, he pays the same price as this customer. So therefore, as far as the retailer is concerned, he is not giving a discount in kind. So at this stage, no taxable event would occur. But when a retailer pays 5,000 to the operator, because the operator would expect, because the operator is sending its members to them, so that reward points are there, operator will see that these are redeemed as and when the customer wants. So these 5,000 rupees which the retailer pays to the operator, it is for a facility, for a service. So this should be subject to service tax. When customer sells his reward points to another, these reward points are rights, right to redeem. So this is property because this is transferable for consideration. So this is an asset. In that sense, reward points are goods, but they are intangibles. Now some groups discussed that these are actionable claims. Some argued that these are not actionable claims but intangible goods. But the concept of actionable claim is that it is goods, but it is property, and it is transferable. It can be sold. But actionable claims are those rights or assets which are incapable of physical possession, like you possess a tangible thing, a car or a music system or anything which is tangible. So actionable claims are intangibles. They are in the shape of a right, and for enjoying this intangible thing, intangible property, if somebody obstructs your enjoyment, then you have to go to the court to enforce it. But in a tangible thing, simply having possession of the goods, you can start enjoying. So all intangible goods are in the nature of actionable claim. All kinds of rights which are transferable, all kinds of assets which are transferable for consideration are actionable claims. So therefore, this is actionable claim. Actionable claim are goods, I would submit, they are incapable of being subjected to any sales tax legislation. Because sales tax legislation depends on geographical location of the product. The state has a right to tax it if the the goods are located within the state at the time of sale. If there is the product or goods move from one state to another as a result of sale, then central sales tax. But intangibles have no geographical location. So even if you list some items, intangibles in the schedule, that doesn't become taxable because that cannot satisfy the definition of goods for the purpose of sales tax. Goods are those which can be stored, which can be transmitted, which can be transferred, which can be destroyed, but not intangibles. So therefore, actionable claims are not subject to sales tax. As the sales tax law is legislated in India, local sales tax, VAT and CST, since they are sales, they are not also subject to service tax. When the consumer who has purchased this reward points from the customer goes to a redeemer who is ready to sell goods or services. Now in this case, 1 lakh worth of telephone service was purchased against redemption and got a discount of 12,000 rupees. So effectively 88,000 the consumer paid. But the operator paid 3,000 to this telephone service provider for this redemption, this transaction of purchase and redemption. So it will be appropriate that this telephone service provider should pay service tax on 91,000, because 1 lakh minus discount 12,000 and plus 3,000 coming from a different source. So that is my view, that this 91,000 should be subject to service tax. Now this another complicated case. This is airline or travel agents, they get reward points. Now I will briefly hide this because that would distract the attention. Let us understand the scheme. The travel agent gets a facility of computers, connectivity, software, using which it can book a segment, either airline ticket, hotel or car rental on the GDS platform. Now how this GDS platform started? Earlier airlines used to have their own sales mechanism. You telephone or you go to travel agent who are the agent of the airline and book ticket. When the technology developed, some airlines in USA, they joined together, and through computer network they could display what all are available, what all sectors, what prices are available. But there are some airlines which took the lead, who had the capability of this technology platform. So they used to list their own segments on top, and other airlines who are associates, who are part of the network, that was shown at the bottom. Then regulatory problem arose, and then law was prescribed that these airlines cannot do that. It should be done by a separate service provider. So all these airlines, they floated companies, separate companies who provided the service on an independent basis. Then gradually this GDS companies, they became independent of these airlines. Now these GDS companies, the platform developed when the independent GDS companies, or this centralized reservation system companies, or global distribution system companies, which is more appropriate because they distribute the segments offered by the service providers. All the service providers had a link to the GDS system, where if anybody wants, then all their offerings will be listed. Then these GDS companies, they are basically technology service providers, but subsequently they became marketeers. They enlisted large number of these travel agents to their segment, and travel agents actually buy tickets on behalf of the customers. The travel agents access the system and see these competing airlines and service providers, and then choose one of them and they book. Now when the GDS companies became quite strong and big, in fact the attraction of the GDS service provider depends on how many people are on its platform. So this type of technology driven services tend to reward the most efficient. In fact, in some segments, winner takes all. Hardly any effective competitor like Google, Facebook, Twitter. So GDS service providers are not many in the world. When the technology developed, then the individual recipients of service, say passengers, they can access the computer of the airlines directly. So airlines thought that probably we will bypass this middleman. Now, in fact, in the world, hardly any airline makes profit. But all those service providers which are connected with airline, travel agent, GDS company, others, they are all making profit. So these airlines, to cut cost, they wanted to bypass the middleman, the GDS. GDS became so strong, it's not only a technology service provider, but it becomes the market where the buyers and sellers met. The buyers are actually the travel agents, and the sellers are those airlines or hotels or car rental agencies. But the airlines could not do that, because even now bulk of the ticketing is done through the agents. Individual purchases are possible, but that there are not many. Even low cost airlines like JetBlue, who initially tried to avoid all this because extra cost. So, but they had to also come on this GDS platform. So this is how it operates. The travel agent books ticket from the airline through the GDS system. Airline gives a booking fee to the GDS company. And all these GDS companies, they have network all over the world through their associate companies, either subsidiary or an independent company which is associated, who do the marketing within the country. So here Amelius India has tied up with Amelius, and then the booking fee which is received by the Amelius Spain is shared, or some part is given to Amelius India, because Amelius India has to do something, and the travel agents are hooked to this GDS system because they are given something which attracts them. The facility, this computer, software, networking, connectivity, and also an incentive. Now, strictly speaking, GDS is a middleman, bringing buyers and sellers together. It is like an online broker. A broker may get remuneration from both parties, or may from one party. May get from the seller, may get from the buyer, or may get from both. Ultimately, whichever model is adopted is amounts to same thing. Ultimately, the amount comes from the pocket of the buyer. So here the seller is paying, the buyer is not paying. Not only buyer, this is travel agents, buyers are not paying, buyers are getting an incentive. Like your credit card, sometimes you don't have to pay if you pay within the time period, and you get reward points for using the credit card more often. So here the travel agents are getting a service, a facility, and also some money. The problem arises, what happens to this money which, because the moment our normal instinctive tendency is that if you are receiving money, you must be giving some service. Definitely you must be giving some service. Then we try to look for and try to fit with the list of services who are there, or now services you don't have to even categorize. So what is the service? What is the nature of service? Now, many groups, they said that they have discovered a provision which seems to be Brahmastra in the hands of the department. 66EE. And many groups have, I have extracted this in some case study. (66EE) declared service. The following shall constitute declared service, namely, agreeing to the obligation to refrain from an act, or to tolerate an act, or a situation, or to do an act. So, what is covered here? The travel agent is refraining from using the service of another, or preferring this GDS service provider, whether this will fall under this category. Now, 66EE should be interpreted not so widely. We have to lay down limitations. Otherwise, anything you do, any contract, all contracts are covered. Now, if you are doing something and getting money, that means here they are booking, they are buying tickets and getting money. So that is the consideration for the 66EE type of service. But if you are otherwise, you would have done the same thing. Merely you are doing, and that too if agent would have directly approached, then you would airline, they would have several persons in the office to directly contact each airline and find out and then compare and then decide. It will be very difficult. Now this is a facility, this is a benefit which they are getting. Now suppose somebody says that I will pay you if you breathe. You would have breathed otherwise. That is hardly an activity which can be considered as service. If you say that I will pay you if you don't go abroad, you don't have means to go abroad. You would never have gone abroad. So that cannot be called a service. If you tell a policeman that if you catch these thieves, I will reward this much, that is not for service. Policeman would have, it is his duty. He would have done that. Now, if a scholarship is given to girl students to attend school, girl student is not doing any service for getting that scholarship. She is getting the benefit of the education. If you tell a witness which is summoned by the court, of course in your case which you are in the court, that I will reward you if you please attend the court, that cannot be a contract for service. He is bound, duty bound to attend the court. And these are rulings. Whatever I said, these are rulings. Now consideration. Now here, what consideration? The argument is that I am preferring another, this GDS company to another GDS company. Now this incentive may be 2%. The other GDS company may be giving 2% and this GDS company may give 2.25%. There will be not very much difference between GDS companies. Now the preference, what is the value of the preference is only 0.25%, not that whole of 2.25%. So therefore what is the value of the service? And in any case, the difference in commission may not be the only factor determining in choosing it. While discussing with clients, I found that some GDS company has preferred in spite of lower incentive because that GDS has better spread, better more number of service providers and better connectivity, better service. The service quality is also a factor for the person who wants to book the ticket. Service quality is also a factor. So how do you choose what is the value of service? Now in contract, value of that consideration has to be substantial, has to some valuable consideration. It may be inadequate, it may be less than what others would have got, but it cannot be insignificant. I will give you some examples. Now this, if I tell somebody that you please get the Rolls-Royce car from my garage to this place, I will reward you with the car. Will the court enforce that agreement? No. Similarly, Tata Motors said to dealer you construct a showroom with this kind of features and pays some amount to the dealer. The dealer, it is in dealer's own interest to have the showroom, it has to sell cars. So therefore, this dealer is not providing any service. It is at best it can be said as an advance discount which Tata Motors gives. But if Tata Motors says to another person, you build a school, or this dealer to build a school and which some trust will operate, there it will not be. There the person is not getting any benefit, he is getting a consideration for doing that service. So, if somebody is getting nothing, getting something for doing almost nothing, or would have done anything otherwise also in his own interest, then we should look beyond this transaction and find out what is the nature of the transaction. Now in the taxation there is a concept called step transaction. If there are certain steps, independent individual activities, seemingly independent activities, are taking place one after another and in a preordained manner, necessarily in that sense it has to take place, then the courts have held that the tax authorities can ignore the intermediary transaction, take the first and last and take the net effect. Now the step transaction will happen and is to be accepted when there is a binding commitment, and then all the steps one after another, they have mutual interdependence. When any of the steps will become futile unless all the steps are undertaken, then the objective is to get the end result. Now these are the tests where step transactions has to be taken into account, only the first and last, and see the net effect, which is and accordingly view the or characterize the transaction. Now let us go back to this. Now here what happens? The travel agent books page 100. It goes to airline. Airline pays a booking fee of 10 rupees to Amelio GDS. Now Amelio GDS out of 10 gives 5 to Amelio India, because Amelio is doing the legwork part in India in locating the travel agents, servicing them. And then Amelio India out of this 5 rupees gives 2 rupees to the travel agent. Now this is how the step transaction, the circle is complete. So from the point of view of travel agent, what it constitutes? It is nothing but a discount or the reduction in the cost of the travel agent. The cost of booking a ticket. It may not be direct price reduction from airlines, but the way he operates, he gets a facility which reduces the cost, and also he gets 2 rupees which also reduces the cost. So this is nothing but a reduction in the cost for the travel agent, and effectively he is paying 98 rupees. It should be viewed in that way, because otherwise this individual transaction, if you take, that to lose its meaning, because we will not able to find out what is the consideration, what is the service. These are all linked. So this way it has to be viewed. This is my view, but most of the operators in India, they are quite they are demanding, and this GDS companies are paying. And while discussing this thing, some of the GDS companies are deducting TDS from this 2 rupees. Travel agent actually is happy, he is getting extra incentive. If you deduct TDS, he doesn't mind. TDS is not a permanent loss. But now they are saying that you are deducting TDS, that means you are considering it as a service, so you must pay a service tax. But I think this is the most appropriate way of looking at things. Now this captive jetty. Captive jetty, the question was simple. All of, yes please.
Scenario after July 2012 also remains the same?
Same. I am not, it is not dependent on any service tax provision. It is not dependent, I am only analyzing the commercial transaction. So there is only purchase and sale transaction involved, nothing else. There is no other. Because the Amelio India is nobody. He says that I will get your ticket booked through Amelio GDS. And Amelio GDS is getting a booking fee. It is only when he books that this thing triggers. Now one cannot say that I am giving a service of booking, so I am getting a fee of 2 rupees, but he has to spend 100 rupees. For getting an incentive of 2 rupees, one would not spend 100 rupees. So that is why you have to look beyond. You have to find out what is happening underneath. So we have to go and see the transactions and link them. Then only we will come to know, because there are several seemingly independent transactions which are necessary to be treated as one composite activity, and accordingly each party has to be treated for tax purpose. So here, as far as the travel agent concerned, travel agent is only buying a ticket, nothing else.
What about initial bonus amount which the travel agent is getting?
This is a reduction in cost. This is a purchase and sale transaction, part of that only. Somebody purchased a card, students traveling in London Tube, they get concession, they purchased an identity card by paying an upfront fee and subsequently concessional rate. That card which they purchased, the initial paid, it was held that this is an advance payment for the journey.
What about the restriction?
80-20 restriction? Which one?
80-20 business restriction?
No, 80-20, that restriction there has been put in for practical purpose. Suppose the GDS line is down. In that case, the travel agent should have some ability to service his clients. That is why up to 20% it has been allowed. So by ensuring 80%, it is this Amelio India ensures that he is the captive consumer of this service, or the buyer platform, user of the platform, only for that purpose. Yes, please.
So that 100 rupees which is paid by the travel agent, by name only it is, he is a travel agent. He collects that 100 rupees from his customer and then he pays to the GDS.
No, I will explain. Travel agents are not agents. They are doing their own business. They are principals. They are resellers. They often sell tickets on credit. And if customer doesn't pay, the airlines will not identify. They are not agent of either customer or the agent. If they would have been agent, they would have established a commercial legal relationship between the customer and the agent. If he cancels the ticket, he will not go to the airline to get the refund. The agent has to pay the refund. Agent sometimes shares his commission with the customer. So between customer and agent, there is a principal to principal relationship. He is an agency or a commercial establishment. He is actually not an agent.
And if in this situation, if he really acted as an agent, he merely collecting the amount from his buyers of the tickets, and if he is paying, then would have been
anybody who is an agent, you remove the agent and the same situation will prevail. Instead of the travel agent being principal, the customer becomes the principal, but the relationship will same. The circle will remain same. That step transaction will remain same.
But that will be the 2 rupees which is received by him, it will be his income. Whereas that 100 rupees which is collected and paid, it will not be his cost.
Collected
and paid, it will not be his cost. I am simply collecting 100 rupees, I am paying it. Against that whole circle, I am receiving 2 rupees. That 2 rupees I am not passing out to my customer, it is my income.
So you are a principal, you are a reseller. You are buying the ticket at 98 and selling it 100. So you are...
It doesn't happen. I have to buy the ticket. Say I am an agent, I collect 100 rupees from the customer, I pay 100 rupees to the airline, and later on at the end of the month, airline reimburses me 2 rupees.
No, that timing difference is not material. As long as this is preordained, it has to happen and you acquire the right at that moment, at the time of booking, then everything has to be netted. So he may receive 100, all the turnover discounts are given much later, after 1 year when the turnover is achieved. At that time an amount is passed on to the dealer by the manufacturer. So what we have to see at the time of booking, whether you have acquired that right or not. The next, this captive jetty.
Sir, excuse me. I would request the participant, let him share his views and all, and let him complete his whole session with his views and all. Then only we can, if we have any time left, we can go with the question answer if we have. Otherwise, we will not able to complete the session. Let him complete his views and all.
Particular case where it should be short at that time.
Now we can share, but let us be quick.
Let us be quick.
We will answer all the questions. Now this captive jetty, the question is quite easy. Everybody replied that there is an exemption. So there is no need of going into anything as far as the answer is concerned. But some people raised the issue of valuation and VAT. Now as far as VAT is concerned, there is a construction service. There is a wash contract by the ABC. But what is the remuneration? Remuneration is not in money. Remuneration is in the shape of service, port service. So it's a situation of barter. So therefore no VAT. But as far as valuation is concerned, maybe for the purpose of SENVAT credit, what will be valuation is extremely difficult. Now one view was that it's a self-service. ABC is constructing jetty to use for its own use and for a long period of 30 years. And not only that, ABC has to keep the jetty maintained. And when the jetty is not being used, then only this port trust can give to somebody else. So therefore, as far as the 30-year period, during that period is, they have constructed something which they themselves are using. So it is sort of self-service as far as that is concerned. Now this valuation rule says that if payment is in kind, then you take the equivalent money consideration. Now what is the equivalent money consideration? Equivalent consideration, here the port trust is giving service. So this is extremely complex, and if you take into account the captive use, this jetty has been constructed and being, of course there is a service because the jetty belongs to the port, but that is not over. For jetty, this ABC is not getting something different, say gold. ABC is getting in return the jetty itself, the right to use the jetty itself. So when jetty is being used, it is a captive use. Like in Central Excise, you manufacture an intermediate product and use it for manufacturing some other product which is cleared for sale. Then the law permits that the in between you ignore, you pay the tax on the end because this credit mechanism is there. Now some such sort of thing can also be argued here, that this intermediary, since it being used for further, so we can ignore this and concentrate on the final taxable event, and this is nothing but a cost. So I am not reaching any final conclusion here. I am leaving the thought for further exploration by you. Now next,
This 75% amount which is being charged by the port trust is from providing the port services. Cannot be said to be in form of any discount. So any consideration for the safety to be used by the port trust.
from port's point of view, also there will be a challenge. Port is getting 75% in money. But what about the balance? Port is giving port service. How it is to be valued? Whether port has to pay only on 75% or something more, because port is giving a free jetty. So part of the jetty which port has got is towards the consideration of port service. So therefore something has to be added to 75% to arrive at the value of port service. How much is to be added? Again, that is a thought. I leave it to you. No, I do not have all the answers. I think I will have to think before, because I never thought, because these were being raised in the discussion. Because I had ended with the question. The question says whether it is taxable or not. Now let's go to the next. Captive power plant. Now here, all the groups have said that there are three independent transactions. Leasing of the plant, subject to renting of immovable property, tax as renting, then sale of washery rejects, VAT, and sale of electricity duty has to be paid. Now there is a minority view that no, you don't go into all these details. There is one, you combine all of them and take the net effect, and the net effect is some service, and accordingly you tax it. Now here what happens? What is the objective of Jharkhand Coal Company? To get uninterrupted power supply. And it doesn't want to operate the plant, it wants somebody else to operate the plant and supply electricity. This power company wants to earn money by operating and maintaining the power plant and generating power and supplying the power to Jharkhand Coal Company up to an amount beyond which if he generates, he is free to sell in the market. So here each segment is dependent on the other. The breach of any one segment would lead to breach of the other, whole contract. So therefore, we have to see the entire contract as a whole. Now here the composite transaction, if there are several independent contracts, but somehow they are linked together, that means either there is an umbrella contract or there are other provisions where breach of any particular contract leads to breach of the others, then all the contracts should be taken as a single transaction. Now in case of super polyfabrics, Supreme Court said that you have to read the contract as a whole. Don't go by any particular sentence or expression there. Sundaram Finance also, you have to see the economic reality of whatever, even if it is something called a sale letter, it is not a sale letter, it may be some security for the lender. In Vijay Bank case, this companies are purchasing, financial institutions are purchasing government securities. Government securities offer a rate of interest, and if you buy, say, after 4 months, if 12% rate of interest, so they used to pay a certain amount towards capital and 4 rupees, if 100 rupees is face value, 4 rupees as the interest. And treating interest as income and the rest is as the purchase price. There the Supreme Court said this dichotomy is not proper. What you are buying is an asset. Whatever you are paying, whatever name you may give, whatever goes from your pocket, the entire amount is towards purchase. So that broken period interest is also part of the purchase. In Bokaro Steel, the company which was executing a project through a contractor had given some quarters on rent to the employees of the contractor and getting some rent, and given some advance, getting some interest, given some equipment like bulldozer, excavators, and getting some charges, again rental for those. Now whether those are income in the hands of the company from those sources or not, that was the question. Here the Supreme Court said that you see the objective. Objective is to facilitate construction of the project, so that the contractor has been given these facilities, either loan or the equipment or the quarters, otherwise he would have charged more. So this is nothing but part of the project cost. It goes on to reduce the project cost. So everything is netted and taken as one single transaction. In India, there are separate contracts for supply and separately commissioning and installation. But there was a clause that the breach of one will lead to the other. That means the customer is interested in taking over the complete installed and commissioned plant. So there the Supreme Court said no, this is one transaction. It may be described in two documents because of the cross-fall breach condition, it is one. In BSES similarly there are 4 contracts: onshore, offshore, supply, service, and then there is an umbrella contract. And this bank guarantee was invoked only in respect of all. And then the contractor said no, there are 4 contracts, you can invoke only that contract where there is a breach. Supreme Court said there is only one contract, all bank guarantees can be invoked. So, even if there are separate citations, separate documents, separate contracts, or within this single contract, there are several activities, separate prices mentioned, these are not independent transactions. Unless if one is completed, the contractor is entitled to receive the amount even if he does not fulfill the other obligations. But mostly it is, usually it is not so. These are only on account payments. Contract price is one, contractor is one, and the customer is one. The objective is also one. Now what service means? Now there is a definition. Any activity carried out by a person for another for a consideration. So therefore, one has to find out what activity is being done for another for a consideration. But if somebody is undertaking activity, maybe some other person is getting benefit, and the person who is undertaking activity is also benefiting. He is also doing for himself. Then this will not fall within this. So we have to see what in the collaboration agreement, what the contractor is doing or what the owner is doing, whether that is something which is done for another for a consideration. Now here what are the transactions which needs consideration from tax treatment, for tax treatment? The builder would pay 5 crore cash and 20 crore towards rent. Now here the builder is to construct the building, and what the builder will get? Builder will get a proportionate right in the property, in the land, and the right to construct and sell his part of the flats. Now, as far as the sale of that right is concerned, that is not sale of goods, so that is not payable. The builder would undertake the construction against this right which it is getting, but the right which his builder is getting, that value of the undivided portion of the land, that is not the entire consideration for the builder, because builder is paying something. So out of the value of that land, this 5 crore 20 lakhs should be reduced, and the rest can be considered as the remuneration for the builder for constructing the building, and in respect of those flats which will go to the owner. Now as far as service tax is concerned, what valuation, and this remuneration is in kind, it is in that proportionate land value. So therefore the money value is to be taken as the value for the purpose of paying service tax. Now, sale of flat under construction. There is massive controversy going on because of that K. Raheja and L&T and the changes in the service tax law. So service tax is being demanded if the sale is not taking place after construction. Now we'll go to that. There is one minority point of view In this case, this valuation of the builder's consideration for service tax. Most of the people said that you take the value of the land, the undivided portion, and reduce what is paying, contractor is paying, balance is the consideration he is getting. But there is one view, is that you take the value of the flat, which the contractor is retaining, value of the flat, because that he will sell, which the contractor is retaining, from that 5.2 crore you can reduce. This is a completely different angle one person viewed. But is that correct? What the builder is when the builder will sell his flat, he will sell a value-added thing, the undivided portion of land and also the construction which the builder has constructed. So the flat value will be much more than the land value. So therefore, the construction which the value addition the builder has done, that is for himself. He has constructed for himself, that there is no service. It is the value which he has got only in the shape of land, which can be treated as consideration for the builder, and not what he has constructed in his portion of the building. Now this sale of flat under construction. Now here, if the contractor if the developer has engaged a contractor, and developer is selling the flats under construction, there is a ruling of this L&T State of AP, where the Supreme Court, there is not much sound logic in this, but there is a judgment that if the subcontractor has already incorporated the goods in the works, then the contractor cannot make a dim sale of those same goods. So there will be no further dim sales as far as the contractor is concerned. But in case a developer engages a contractor who is paying service tax, and the goods incorporated in the building, how there can be worse contract as far as developer and the ultimate buyer is concerned, even if the flat is sold before completion of the construction on installments. Now here it says that the transaction in transfer of title to goods in goods or immovable property is not service. But at the same, this sale of flat under construction is deemed to be a service. No, there is contradiction. Now, this has to be harmonized. Something is excluded and other thing is included. Now see, there is a difference in language of the current law and earlier, when this explanation was introduced earlier in 2010, when it played havoc. Now it says construction of complex building, civil structure or a part thereof, including a complex or building intended for sale to a buyer, wholly or partly, except where the entire consideration is received after issuance of completion certificate. They have paraphrased the earlier language which is there in the explanation, but there is no deeming provision here. Earlier it mentioned that the builder is deemed to have provided service to the buyer. Now how one can provide service to a buyer in the same transaction, that is a difficult question, but at least those deeming provisions are not there in the current law. So one can say in the current law, a sale transaction will not be covered by this. It's only a contractor situation will get covered. So in my view, even if this contractor or the owner sells the flat under construction, this will not get covered. Now 6, forfeiture.
Sir, the first transaction of the builder constructing for the
Builder?
Constructing for builder for the landlord, is it a works contract?
Builder is the main objective of the owner is to get the building constructed.
So 2 floor which is getting,
Two floor which builder retains.
yeah,
There is no service because he is serving himself.
no, for the landlord,
For the owner there will be construction service.
not the works contract service?
Construction service is work contract service only. There is no difference.
No, there are 2 use of separately construction service and works contract.
Construction service and work contract service they are same.
So the construction will be included
Hmm?
in works contract. So for the purpose of valuation
Maybe for the purpose of taxation may be there, abatement, all those things may be there, but as far as builder is concerned, giving works contract service or construction service to the owner only, not to the buyers.
Yeah, but the question of valuation would arise.
Valuation in the hands of the contractor is what the land value, that is he is getting in kind.
No, if it is the works contract, then the valuation rules will come into picture.
Yes, valuation will come to the picture.
Yeah, so in that case, why don't you go for the cost of construction?
Cost of?
Cost of construction. The cost of construction for the landlord portion.
Cost of construction you will take if you cannot determine the money value of the consideration. Money value of the consideration is the land, whatever is land value is there, that can be money value can be found. As far as the service between contractor and the builder and the owner. So now coming to the 6 forfeiture amount. Now here every group invoked 66 EE says that I am providing a service of tolerating an act of cancellation. So therefore it is a service. Now we should go to the concept of contract, because service without contract cannot be there. There has to be some understanding what service I will render and what money I will get. So every set of reciprocal promises is a contract. That is the definition of contract under the Contract Act. The consideration which is received is at the desire of the promisor. That is at the stage of signing the contract. Damages are provided for breach of contract, and these damages can be provided in the contract itself in a predetermined manner, liquidated damages. Now this is honest money, which is application money one deposits. That time there is no contract. It is only in the anticipation of a contract that this deposit is made, with the intention of entering into a contract. Now, if the consideration is at the desire of the promisor, whatever is to be done, then that has to be at the inception of the contract. But damages, this Indian Contract Act has a separate chapter. Compensation of loss or damage caused by breach of contract, compensation of breach of contract where penalty is stipulated, liquidated damages, and party rightfully can rescind the contract. So the result of breach of contract has been separately provided, and the definition, consideration, contracts are separately provided. Formation of contract is separately provided. Now let us find what is the intention when a flat buyer makes an application for a flat and gives deposit. At this stage, the intention is to buy. At this stage, the builder or developer intention is to sell. Now subsequently, the applicant might have defaulted, due to which as per the terms of the contract, it is forfeited. Or it might be allotted, the purchaser might have paid some installment, subsequently defaulted, then the developer has the right to cancel, and whatever is provided for may appropriate this. Now, what happens when the default occurs? Now here the argument is that when the default occurs, the developer incurs certain inconvenience, and for agreeing to tolerate the inconvenience, the developer is collecting this amount as a remuneration. Now, is that the intention of the contract? When somebody applies, he has no intention of subsequently defaulting and losing the whole money. When somebody gets allotment, it starts paying, he has no intention of cancelling the contract and losing that money, otherwise he would not be in the right frame of mind. So the intention, dominant intention of the contract is to buy and sell and nothing else. Breaching the contract and suffering this, being compelled to pay compensation is not the intention of the contract. It cannot be said that when the contract is broken, then another contract comes into being, and then the suffering starts and suffering gets fulfilled and the compensation is paid as consideration. That means the breach of contract is fulfillment of a contract. This is an absurd situation. So that a breach of contract, compensation for breach, that cannot be regarded, can never be regarded as fulfillment of contract. If there is, from inception, there would have been an obligation or the intention by somebody that you please tolerate this thing, I will pay you. So there, at that point of time, there has to be some objective, some intention of the person who is paying for the other person tolerating some nuisance. Now here, when the contract is broken, there is no intention for the other party actually to do that. The party had never an intention to inflict a nuisance and also pay for it. If there is a reciprocal promise, obligation, then a party can enforce. That this builder cannot say that no, I am ready to suffer, you breach the contract and you pay me. I will enforce my right. There is no such right in the contract. So it's all nothing but compensation. So 66E, that forbearance or the tolerance or refrain from doing something, those things will not come here unless 66E, there is an ab initio, at the inception such an intention is there of the formation of the contract. So therefore breach of contract, anything paid as damages, if suppose liquidated damages is not there, somebody breaks this promise and does not fulfill, and the agreed party goes to the court, he can get compensation for damages from the court. Now that cannot be treated as a service, as a compensation for tolerating nuisance. So therefore, in my view, this forfeiture amount cannot be subject to service tax. Now this, I have included a definition of this liquidated damages. There is an interesting case of European Court of Justice where the deposits made in the hotel for booking rooms, that was held not to be for the forfeiture amount, is not for providing any service. Since on the one hand the deposit paid does not constitute the fee collected by a hotelier by way of genuine consideration for supply of independent or identifiable service to his client, and on the other hand, the retention of that deposit following the client's cancellation is intended to offset the consequences of non-performance of the contract, it may be held that neither the payment of deposit nor the retention of that deposit nor the return of double the amount is considered covered by this law. Now 7, works contract valuation. Why this contractor had doubt? Because in Rajasthan it had a happy situation, paying just 1%, 1% tax. Actually this they called it a fee to get the exemption from paying tax. So here the problem arose in valuation rule 2A. Rule 2A, one can exclude the value of goods itemized basis or go for percentage on the gross contract value. Now here this dilemma before the contractor was that they have paid only 1%. Can they avail 2A1I, or necessarily they have to go to 2 where a percentage has to be applied? Now here there is an explanation. The problem is in C. It says where value-added tax or sales tax has been paid or payable on the actual value of property in the goods transferred, then that value you can adopt for excluding the value of the goods. But here they have paid 1% on the entire contract. So therefore there was argument, and some groups agreed that 1% payment on the whole contract is not payment on the actual value of the goods, sales tax. So 2A1I is not available. Necessarily one has to go to that 40% route. But here the interpretation which requires 2A1 says value of service portion in the execution of the works contract shall be equivalent to gross amount charged for the works contract less the value of property in goods transferred in the execution of the said contract. It says you can on itemized basis you can exclude the value of those goods. But C says that only if you have paid tax on actual value of the goods, you can exclude that. Now here one should see that C covers a situation which is much smaller than what is covered by 2A1. 2A1 is general, broad. Explanation C is providing a legal fiction, a easy way of finding out the value. So there one has to interpret whether what 2A1 prescribes, whether one can avail 2A1 by appropriately valuing those goods and not go to C. Now there is an interesting case that this case probably has not been quoted here. There was a case in rent control. Similarly, main provision was there. There was an explanation covering that in this situation you can treat it as that. So there the Supreme Court said the explanation may be giving a simple way of fulfilling the main provision. But that does not mean that the scope of main provision is reduced or restricted by this simple way of determining that. So therefore, one can value after paying 1% sales tax, and that is not a fee, that is actually a tax. One can individually value the goods on the basis of cost and proportionate profit and exclude the value of the goods and still avail 2A1 without C. So these are rulings on fee and tax. Actually this is a tax. And Rajasthan Act itself says that the tax as tax or any other levy by any other name leviable under the provisions of the Act. Since 1% is paid under the provisions of the Act, so this is a tax. Now 8. Everybody agreed that a higher rate is applicable from 1/3/2008 because tax rate has changed. And then some people said that this Nagarjun construction, Supreme Court does not apply. What Nagarjun construction held in by Supreme Court? In fact, our law courts operate on the basis of adversarial system. That means two parties will come with their problems and they argue against each other, and the judge has to decide who is better. If they come with a civil dispute and they compromise, the judge will accept. If A says that I have sold Rashtrapati Bhavan for 5 crores, you have not paid, filed a suit, and then again they compromise, no, I am ready to accept after 1 month, so this should be decided. The court also will say, okay, it is decided. So, if two adversaries agree on a point which is wrong, court will not say anything. Court will proceed on that basis. This is what happened in Nagarjun construction, before High Court and even before Supreme Court. Now what Nagarjun construction did, paid this service tax under this erection, commissioning, installation, construction service, and wanted to switch over to construction service after 1/6/2007. There the Supreme Court said that this rule itself says that once you adopt, you cannot change for the whole contract. So Department Circular is correct. Department Circular says that you cannot vivisect in terms of time. So if you have been paying tax under erection, commissioning, installation or construction, commercial industrial construction service, you should keep on paying under that category for the entire contract. But the proper argument should have been that it will not form under those earlier categories, it can form only under the construction, this works contract service, and is taxable from 1/6/2007. Then further, either to pay that whatever tax I have paid was wrong and I will pay tax correctly henceforth, or further one can say that this will apply to only contracts which were entered into on or after 1/6/2007, taking cue from 3.3, saying that the same law will apply to the entire contract, and the Department Circular itself says that you cannot vivisect in terms of time. That means you cannot give different tax treatment in terms of time. But this is what happened. one question was that the question was open as to when it was received. This amount received after 1/3/2008. What about in this contract if amount is received now? So there some groups have invoked this continuous supply, saying that continuous supply will apply. So current rate of tax will apply, point of taxation rule. But what continuous supply says means service which is provided or to provide continuously on recurrent basis, and something can be notified, and works contract service is one of the notified service. Now here this 3 proviso 1, in case of continuous supply of service where the provision of whole or part of service is determined periodically or on the completion of an event in terms of a contract which requires service receiver, the receivers of service to make payment. Now in case of works contract service, the work is not done in an uniform manner like telephone service. Goods may be used in between, at the end, so any place during the contract. In case of a works contract service, one can exclude the value of the goods. So you cannot exclude the value of the goods until the contract is over. So here the contract is one, the delivery is one at the end. And here on account payment is periodic payment only if milestones are there. But it says in case of continuous supply of service where this provision of whole or part of the service is determined periodically. Now here determination means some measurement should be there and corresponding amount should be released. And provided the corresponding amount which is released, you have right to retain it even if you don't do the rest, which is not correct. It's one contract, one. So therefore, in my view, the continuous supply rule will not apply. So the tax which is applicable at the time of entering into the contract will apply to the whole of the contract. Now we have got half an hour. So we'll go to this paper, deconstructing confusion as to what happens if you do not read history, or if you read history but don't understand it. Now what had happened, this 46th Constitution Amendment came. Why? To overcome this Gyanandankalli case. But why we forgot, and K. Raheja said, when the flat is under construction and it is sold, so there is an understanding between the developer and the purchaser to construct the flat and sell it. So there is a works contract. This was doubted in the referring bench in the L&T case. Here they said that can a sale contract be a works contract? Now if that is accepted, there will be no difference between sale and service or a works contract, especially tailor-made goods where you ask somebody to prepare and then sell it. Now, larger bench, 3-judge bench heard it at length and has given a detailed order and upheld K. Raheja. The activity of this construction by the developer will be works contract from the stage of when the agreement is entered into, up to that stage, whatever construction has already been completed, that is not works contract. Henceforth, the rest of the activity is works contract. In a multi-story building, I don't know how it can be done if somebody is buying a flat, say 10th floor, and only construction is up to 4th floor. Now let's go back to history. This all started in Gyanandankalli case, now known as first Gyanandankalli because another Gyanandankalli had come. Now here it was a case of building contract. Now there the court held that all the materials which are used, there is no sale, there is no understanding of sale of those materials. The only understanding is to have a completely constructed building. So there is some transfer of property, but that gets transferred while the building is being constructed by way of incorporation, accretion to the property of the customer. Now this is specifically mentioned in Law Commission report in the objection reasons to the 46th Constitution Amendment, that the purpose is to overcome the consequence of Gyanandakarli case. Now this, after 46th Constitution Amendment, this was examined in a big way by a 5-member bench, Constitution bench in Builders Association. What Builders Association held, that in a execution of works contract, there is no sale of the works contract, that contracted building. What is being sold are only those materials which get into this works contract. So therefore, there is a distinction between the contract price and the value of the works contract, which will be less than the contract price. This was again examined by another 5-judge bench, Constitution bench, in the second Gyanandakarli case. So there they said that here the states wanted to levy tax on the entire contract price, saying that the works contract is the whole thing. Whole works contract has come into tax net. So all the value additions resulting in this building, entire thing should get taxed to VAT. There the Supreme Court said no. The value of the goods at the time of incorporation. It is not only cost of acquisition, but all the transportation and other value addition just before incorporation. The value is be subject to sales tax, but the act of incorporation, the amount of labor put by putting them in the building, actual incorporation, that will not be subject to VAT. So the cost of incorporation is not subject to VAT. This is an interesting case which has been noted, analyzed by these 3 judgments in L&T case, larger bench, but they have mutedly criticized, saying that this logic is not valid for after 46th Constitution Amendment. But this is exactly the opposite of what the conclusion of this larger bench. And in fact, if larger bench, this is a 2-judge bench. If the larger bench would have applied its ruling finding ratio to the facts of this case, it should have overruled this, which it did not. Now here what happened? A ship was to be constructed according to the specifications of the customer. This is after 46th Constitution Amendment. Andhra Pradesh Sales Tax authorities wanted to levy it as works contract tax. But the Supreme Court said no, this is sale of constructed ship. Even though this is as per the specification of the customer. It went into this Halsbury Laws of England, then Benjamin Sale of Goods Act, Pollock Mullah, and formulated certain principles. If the primary object of the contract is work, work by bestowal of labor and services, and some materials are used, this is a service contract. If you engage a painter to draw your portrait, he uses his own frame, canvas, paint, and gives you a portrait at the end. There is no sale of the portrait. The intention is to engage the skill and labor. But if something is in existence as individual property of the person who is to deliver, if you go to the studio of the painter, pick up a painting and pay for that, that is a sale of the painting. Then this is also another significant analysis. There are 3 types of contracts. The contract may be for work and work to be done for remuneration and supply of materials used in the execution of for a price. Both goods and labor are involved. B. Contract for work in which use of material is accessory or incidental. The painting of the portrait, which example I gave. The contract for supply of goods where some work is required to be done as incidental to the sale. If you go and buy a pair of jeans, it will not be as according to your length. within half an hour it will alter it and the shop will hand over. So that service of altering is incidental to sale. So these are the three types. One is pure service, the other is pure sale, and the first one where the intention to get both the labor and also the goods. That means the goods part are not insignificant. So these are the three type of contracts. Now there are several other rulings where I think we can draw some logic to make a complete understanding of what 46th Constitution Amendment is meant for. In this case, is printing of university question papers. That was the issue. So here the primary difference between contract for work and labor, again that earlier one that has been repeated. Where the finished product supplied to a particular customer is not commercial commodity in the sense that it cannot be sold in the market. University question paper, if suppose it is wrongly printed, the university says no, this is defective, you cannot sell it in the market as question paper. In fact, in such type of contracts, most of these type of contract, the university would say that even if it is defective, you have to hand over to me. Otherwise, it may be subject to misuse. Or currency notes. If a contractor prints currency note, even defective currency notes doesn't belong to him. The moment they come into existence, they belong to the customer. Similarly, checkbooks. So there are some types where goods are used, things are produced, but the moment things are produced, it belongs to the customer. At no stage the thing which is transferred belongs to the contractor. So this is a works contract. But works contract of the type of 46th Constitution Amendment, that we have to decide. Now what this 46th Constitution Amendment says, Article 366, sub-article 29A was introduced, then clause B. It says passing of property during the rendering of service as a result of execution of the service. That means you are rendering the service by incorporating, by transferring. At that time only things got transferred. It is not that it will get transferred after you have finished everything. So it has to be during the execution of the works contract that the property should get transferred. Now that can get transferred only by way of annexation or accretion to the property of the customer. Either is a building on land, or it can be repaired to any equipment which is movable, but you incorporate goods by way of repair. Now there are other instances. Bharat Sanchar Nigam 3-judge bench case analyzed traced the history of this and laid down the scope of 46th Constitutional Amendment, whether sale of SIM card is sale of goods or is part of service. Now they have given some example. In the hospital, when treatment is given, the pill is given at the part of the treatment to the patient, there is no sale of the medicine. Similarly, doctors, lawyers giving the opinion or prescription, hand over a paper with some writing. There is no sale of the paper. This is not a works contract. They are purely incidental and 100% service. There is no works contract. Now, this is what I have formulated after understanding the entire gamut of the history and what these courts have held. There are several types of service contracts. Now, whether there is a deemed sale by way of works contract or not, that we have to find out. If the goods are completely insignificant, goods are not at all objective, it is for better enjoyment of the service, say SIM card. It is only identifying the customer, see how much credit is there, other things are there only for the getting the telephone service, or even the food you get in the aircraft as part of your ticket, full service carrier. Their food is only for better enjoyment of that is not the objective of this. So there it is purely service. Then goods have significant value. So there you cannot say that just insignificant goods can be ignored. The entire thing is labor and work and labor. So here the customer wants both, as well as the service, quality of the service and quality of the goods. But if the customer provides the goods from his sources and does everything, the end product is transferred like a ship. So there is no dim sale, it's a sale. Then wars contract. Which are wars contract? Which are labor and work and labor and also goods are used. If all materials are used by the contractor, customer doesn't supply anything. There is no accretion of the goods or material to the property of the customer. In that case, the property in the material does not get progressively transferred to the customer in the execution of the contract, or during the execution of the contract. It gets transferred only when it is handed over, after everything is over. So therefore, in this case, it may be wars contract, like question papers, currency notes, or bank checkbooks. It is wars contract, but not of the type to which 46th Constitution Amendment would apply. Similarly, photocopy. Of course, there is a ruling in SEC which was not necessary, but they have earlier two judgment ruling they have overruled, but I think that is not a correct thing. Because they are in photocopying, we are not interested in the paper, we are interested more in the image. So everything should be service. But if some material is used by the contractor and the other material are given by the customer, and there is a blending, value addition, what emerges at the end, that thing does not wholly belong to the contractor. There is something of the customer. So therefore, in such cases, property will get transferred to the customer while things are get blended during the execution of the contract, in the execution of the wars contract. So this will be subject to this dim sale, concept of dim sale. Otherwise, there cannot be. Now, in this ruling, there are some conclusions which I think that not correct, which I have listed. There may be more. Now, this court says there is no need to apply dominant nature test for interpreting the contract covered by Article 366(29)(a)(b). No, that may be correct, but if by applying dominant nature test, if something is sale or something is purely service, you don't say make it fall under this 46th Constitution Amendment and then try to find out what is the dim sale. Now, what was the intention in that 46th Constitution Amendment where the states wanted to levy tax? In a wars contract, they could not levy tax because what was passing on is immovable. So this Constitution Amendment carved out certain segment out of that wars contract as dim sale. But in case of sale of flat under construction, the court is admitting ultimately it may result in sale. The contract is only for sale and it covers the entire scope, all the work. What is being transferred is the entire immovable property. Now here the court is trying to carve out dim sale out of sale, whereas the intention was to carve out dim sale out of wars contract. So something which is a sale, you don't need. In fact, that time also the courts, the states were not clamoring for to levy sales tax, which is otherwise sale, but cannot be subject to sales tax like immovable property. So the legal fiction This is the wrong way of carving out, the reverse way of carving out. It failed to appreciate the meaning of the expression tax on sale or purchase of goods. Under this clause, transfer of property in the goods, the course of execution of the wash contract has been deemed to be sale. Where a person is selling, the goods incorporated have not passed on to the other person before sale. Everything will be passed on only after sale. So nothing is passing on at the time of construction. All transfer is taking place after the construction. Then it is immaterial that the flat buyer has no say in designing. Now this argument they rejected. With what logic? No logic. What was argued? That the flat buyer who purchases and is supposed to enter into a construction contract has no say about the design, about the nature, quality of the material, layout, plan, or it has no authority to supervise the construction. He says, so what? It can still be wash contract. But what is the meaning of contract? Contract is a promise to be delivered. What is the promise? What is the extent of promise? Construction. It's not only delivery of flat, it's a construction. If somebody is promising to construct and I have no idea about what construction is going on, then how can it be a contract, construction contract? If the contract to sell flat under construction is wash contract, there is no basis or mechanism. They say that wash contract starts from the stage when the contract is entered into. If multi-story building, say 20-story building, it is constructed up to 4th floor and you buy on 10th floor, you cannot say that the foundation is not for your flat. And how much has been constructed for that flat so far, how to determine? Law doesn't provide. There is no mechanism. In fact, there is a dictum that if mechanism fails, the levy is not intended. So I think that this needs to be overcome by a still larger bench. Till that time, this confusion will continue. So if one does not read history, or even after reading, I would say they have read history because there are many rulings, concurrently and objects and reasons are produced in the judgment. If you don't understand history or try to understand history, you have preconceived notion, then you are condemned to repeat history and will continue to suffer this. So thank you very much. Any questions I can answer.
Any questions?
I'll stand here. Yes.
My question is something related to collaboration. And in most of the joint development agreements, there is a two-way arrangement. Both the parties are coming together. Two developers or two builders are coming together. One builder is already having certain rights, like land rights, and incoming party is joining hands and paying some entry level premium, and then both the parties are joining hands to jointly develop the property. Whether that kind of arrangement will be hit by 66EE.
In case of joint development, what you are saying, both parties are contributing, yes. But one should be very careful. Is it a joint business, or one party is giving some resources but sleeping, not contributing? He may contribute land and then just lend his name at the time of transfer, sign the contracts. If it is a joint conduct of the business, that means both parties are contributing to this decision making process. in that case, they are joint venture. Then one party does not render service to the other. Both render service or go to the market and share the revenue, share the reward. So in that case, the revenue sharing will not be subject to tax.
But if the incoming party is contributing by way of some entry level premium, like there is a developer already having the land rights, and the developer has already carried out certain level of activities, and then a new developer is coming in, they are having a joint development agreement to carry it forward from that point of.
From that point, the collaboration will start, the joint venture will start.
Yes.
So that accordingly it will start.
They should not be hit by
There is no service.
There is no
because,
service. And if they share the revenue, like their agreement or their understanding is that certain portion of the expenses will be responsibility of one partner, and certain portion of expenses will be responsibility of another partner, and they share the sellable material like a number of flats or area. In that situation,
so they may not share at the net profit level. They may share at a gross level, or they may be have separate expenditure, separate parties. But as long as joining hands, joint decision making is there as far as jointness is concerned. So to that extent, there is no service one to the other. So there the revenue sharing at gross level also will not be subject to service tax.
Thank you, sir.
Myself Satish Bhu from Nasik. Sir, one of my friend, Mr. Deepak Amrutkar, paid 3 lakhs rupees to the builder for booking a flat in the month of March 12. No transaction agreement were made between them. That time the building was under construction. Now the completion has received, and now he wants to complete the transaction. Now he wants to save the service tax liability. Can he do that?
No, for me either you are alive or dead.
He is
So
alive.
I have declared that you are alive. That means the tax is not payable. You don't need any medicine to be alive.
Nee.
What I have explained, that sale of a flat which is under construction cannot be subject to service tax. This is my view. Now there is no need for service tax.
But the builder is charging.
What you want to say, that initial payment of 3 lakhs, we can ignore and say that only a fresh transaction entered into and whether I can save service tax or not.
Exactly.
But I am saying that it is not taxable.
It's not taxable at this.
That is my view. That is not what the world is following.
It is not followed. No?
While the builders are doing.
But builders are getting. Only my question is that we definitely welcome your say that there should not be any tax on this flat construction. I'm also of that opinion, but facts are going different. And the builder is asking him, my question is that when he is taxing for him on service tax and completion has been received, so after completion, if he enters into that transaction, because prior to the payment of 3 lakhs
If you can establish this is a fresh transaction, there will be no tax after completion.
Yes. So builder suggested him to have another name instead of his name.
These are ways of avoiding tax.
So can it be done?
No, if you can establish it can be done.
Oh, or otherwise you have to pay. Thank you.
Sir, my query is regarding the air ticketing. Air in the action, if say any person is an agent or the travel agent, he books a tickets with Air India. He says ticket of 100 rupees. He pays to Air India 100 rupees. He collects from the customer 100 rupees and books the ticket. Later on at the head number, Air India issues him commission for 2 rupees after deducting TDS. So according to view expressed by you, it is a sale and purchase of ticket at 2 rupees should be taken as a profit. But when TDS is deducted under the income tax.
Actually, Air India should not deduct TDS because when you are selling to somebody, how can you say that he is an agent and entitled to commission?
But Pacific India.
That is a wrong practice. Actually, this TDS should not be there.
So can we call it a sale of ticket transaction?
It's a discount. It's a discount on sale of ticket.
Sorry, how you hear it? Yeah.
Well, they are all doing.
Sir, in case of this MCHI judgment, Supreme Court latest judgment covering this K. Raja, it appears that the K. Raja's shadow is cast on that judgment, and therefore whatever the conclusion has been arrived. Now, my question is, keeping there are 2 or 3 main propositions that the point at the time of incorporation of the goods, it is a point of taxation for the purpose of levy of tax. Secondly, unless and until the buyer enters into the picture, there is no service, there is no sales made to him. Okay, now, in absence of any mechanism so far, how this can be implemented, and till it is implemented, what will be the situation of sale of the flats so far as the sale of the goods in construction of flats is concerned? And the second question is, will such kind of this judgment have any implication on the service tax on sale of flats?
Service tax is a better footing, but that language they have made worse. The earlier language there is some deeming provision. Now it is not there. In sales tax also there is no mechanism to find out what is the extent of construction. Because if something has been constructed up to a point, there is no mechanism. So one can challenge that unless without mechanism we cannot pay tax. But they are subject to litigation.
Till then it will remain in limbo.
No, I don't know. The department will not leave you.
Sir, my query is regarding the sale of service tax. In Maharashtra, ready reckoner value is declared or changed every on 1st of January. So in month of anybody wants to purchase a flat or shop, he has to buy a stamp which are valid for 4 months. If any customer, any buyer purchase the flat in month of December, having no idea about purchase of flat, and in month of April or say January, February, he purchased the flat with the builder, and he said that it is purchased after completion of the building. So whether service tax authorities can say it is a booking of flat, and how you have purchased the flat prior to any builder you are aware. So is it arguable case or litigation case?
You should ask the department. They will decide whether it is litigation.
So can we argue that there was no builder when stamp were purchased, because 25% rate is different. So it affects so much, and stamp duty is to be borne by the buyer. So 25% cost is a much cost, say 1.5% or 2% of our total value. So because this is a month of January.
You argue that nothing is payable. Yes.
Hello. Sir, you had mentioned about actionable claims, that whatever is intangible, whatever is not capable of possession is actionable claim. On the other hand, we also understand that there are intangibles which are actually property, like rights and rem, like copyright.
Rights in?
Rights and rem, in the sense that it is against the whole world. So, how do we reconcile the two? If they are property, and property is goods, of course actionable claims also are goods. How do I distinguish? Just because it is an intangible, it becomes actionable claim? I'm a little confused on this. Can you elaborate?
Actually, the definition of actionable claim makes it clear that it is incapable of possession. You cannot possess intangibles. So even if intangible right is transferable, it may be right in rem, it is still an intangible. So intangibles, in my view, all intangibles are actionable claims, intangible properties.
So what, I don't need to do much, I don't need to do anything in case I own anything. In the sense that in case I own a property, whether tangible or intangible, I don't need to, I don't have a claim, I own it. So can I distinguish in that fashion, in the sense that I own something?
Ascertainable claims are owned. They are owned. They are not only that you have to go and claim it. They are owned.
Okay.
They are recognized. And still they will not be subject to VAT because it is not incapable. Lottery tickets, even though it has some physical paper is there, but it's a right. So that was held to be not subject to sales tax. But in that judgment, that geographical location argument was not there. By tradition, it has never been subject to tax. That is what the Supreme Court said. But this is also an appropriate argument that you cannot apply any tax law, sales tax law in India, whether CST or local VAT, to actionable claims. That's all.
Last question.
Okay, thank you. Sir, again, this is little different one. One of my client is having a hotel. It's partly air conditioned and liquor license is there. He has given it for conducting to a Shri, and Shri is paying him monthly charges for that organizing. So my question is about this monthly premium he is getting, whatever amount, whether service tax will be applicable and under what category?
This is renting.
See, conducting license.
Huh?
Hotel management conducting license.
Hotel?
Hotel, the entire complete hotel has been given on conducting license because the FL2 license of running the hotel cannot be given on transfer. But he has given it under a conducting license. He is generally given in the city of Nashik.
Is it only immovable property or more than that?
It is more than that, no? See, for selling of liquor, etc., food, etc., that is also to be sold in the hospital, in that hotel.
What about employees?
Employees, that person will manage, the Shri will manage. The entire staff will be of his.
Only immovable property and license.
Only immovable property is not given, conducting license of that, only license is given.
Property is not given.
Property is not given.
Only license.
Property is only for use. The complete infrastructure he has given, but conducting license is given, not in under rent agreement.
Whatever may agreement, possession has been given of the property.
Possession has been.
Right to use has been passed on.
Right to use.
Along with some license. Along with some license.
Correct.
So property plus license.
Correct.
So this is renting.
So there will be charge.
For how long?
It is given for 5 years.
5?
5 years.
In my view, when you give property for 5 years,
yeah,
the transaction happens at the beginning.
Yes, it has happened.
At the beginning.
Yeah.
The transaction is a transfer of the right to occupy the premises for 5 years.
Right.
There is a one-time transfer of the right.
Yeah.
Now when you transfer a right here, right is also actionable claim, is a property. It's also immovable property.
Yeah.
Leasing of immovable property is a separate chapter in transfer of property. So it's a transfer of property.
Okay.
So when you are transacting as transfer of property, it's a case of sale of a right. Now when you transfer a property, after that you don't have to undertake any activity.
Yeah.
So there is no value addition after entering into this arrangement. So the concept of service as value addition by doing and undertaking an activity, which is there in All India Tax Federation case, this is absent. Now these arguments were raised before Delhi High Court and many other high courts. They said no, renting is taxable, but actually is a transaction in transfer of property. So transaction in transfer of property cannot be service.
No, it cannot.
You have to go to the Supreme Court. It is, all these things are pending there.
Well, friends, we know that the queries are never ending. Even if we keep on continuing for 2 more hours on this same topic, the queries will continue. Well, friends, so we are coming to the end of the first technical session. Before giving a well-deserved vote of thanks, we would like to felicitate the group leaders who have taken much efforts in studying the issues and deliberating on the same with the group and then reporting it to the paper writer. I'll spell out the names. From Diwane we have Mr. GVV Satyanarayan from Vijayawada. I'll request Mr. Sahu to please offer a memento to Mr. Satyanarayan. From the Mastani group, we have CA Akhil Kedia. And from the Parwane group, Mr. Kaustubh Khernar from Pune. Coming to the task of the well-deserved vote of thanks, Mr. Sahu has not only meticulously analyzed the various issues involved in the composite transactions on VAT and service tax. He has also given us a few guidelines regarding that we have to read the contract as a whole and not just read in between the lines as we like to read in between the lines. Don't just read in between the lines and pay the tax. Read the contract as a whole. And he has given us some very radical thoughts regarding the travel agents, regarding the builders and developers, and lastly regarding the renting. Well, these views are the other views which he had told that he would be giving other views apart from the views which were discussed in the group. He has done a marvelous task. I request you to please carry out with a very loud applause. We will take a short break of 10 minutes and reassemble for the second paper. Thank you.